Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to this week's Top Stock Picks. I'm Kevin Cook, and my top pick is the Trade Desk. I just wrote this last week, bull of the day, and I've liked this company for a long time. We were lucky to scoop it under 500 during a big pullback right before the 10-for-1 split. Happy to own it and want to buy more. So let me just go over some of the highlights of why I like the Trade Desk so much. I call it the CME of advertising. I'll just read this. Because of their programmatic platform, which enables all ad buyers to set up algorithms based on customer data and targeting. And then the algorithm bids for ad space in real time across the web and connected TV automatically. This CEO Jeff Green just had this great vision that buying advertising should be simple and fast and automated. And he does compare it to the way modern algorithms work in the stock market. And so that's what he's achieved here. And that's why I call it the CME of advertising. So a big part of their business is giving companies consumer data. Now, they're trying to do it in a cleaned up way, so they're not tracking individuals. They use a unique tracking identifier, and it's working. So even though Google's going to get rid of cookies, the Trade Desk is thriving across the real estate, across the web, and connected TV like Roku. So it's not cheap. I said, it's 22 times next year's sales of $1.5 billion, which is where a lot of innovative leading software is trading. If you want to learn more about that, in this article from September 16th, I have a link to a recent piece I did on how to use the rule of 40 in valuing software. Bailey Gifford, biggest, they're just great long-term growth investors. The big fund, $250 billion fund in Edinburgh, Scotland. And they became the largest holder in Q2. They added 11 million shares. I think they hold over 50 million shares. I wouldn't be surprised if they're buying here at 70 right now. I know I'm looking to buy the next dip. So we just had a great quarter. Let's take a look at the price chart real quick. So I mentioned buying under 500. Well, that was pre 10-for-1 split. So under 50. Here was the earnings report, August 9th. It was a beat and raise, but I think there were some concerns on the conference call about how subdued management sounded about, hey, we've got lingering effects from the pandemic. Our forecasting isn't as good as it can be, but yet they're always beating on EPS. This has been a profitable company for a long time. I think they had a 35% earnings beat. Let's go back to this. So, yeah, that was a 38% earnings beat, and the quarter before was a 75% beat on EPS. So, they guide conservative and they just keep wowing the crowd. So here was the concern about COVID. Solimar is the new platform. That's what they call it. It's their latest innovation of this is what's called a DSP, demand side platform, demand from the advertisers to be able to go in there and target specific consumers on specific programs, specific times of day, and just have it run automatically. And the other word I left out of this, why Jeff Green calls it, algorithm based or exchange based, is because these auctions occur automatically. So if your program wants to bid for certain real estate on the web or connected TV, thousands of auctions are happening a day around the world for this real estate for advertisers. So let's just take a look at some of the what analysts did with price targets. Well, we'll look at the estimates real quick. Let's just look at the estimates so we can see why it's a Zacks rank number 2 right now. I thought it should have been bumped up to a number 1, but there's a lot of competition out there. So here was the big boost, from 64 cents to 78 cents this year, and next year went up nicely too. All right, so back to some of the comments here. KeyBank raises their price target to 90 from 74. Big. It's like analysts were really behind on this or unsure what the quarter and outlook was going to be like. And so they all like, here's another big move. D.A. Davidson from 65 to 95 on the price target. Oppenheimer, pretty steadily bullish, went from 85 to 95. Susquehanna guy is been the biggest bull here. His price target was 100 and he bumped it to 105. There is one sort of lukewarm analyst who reluctantly raised price target to 85 at Citi. But you can read this whole article. A lot of good information in there. I'm ready to buy more trade desk under 70. We're in the middle of an emerging correction here in the stock market. If you get a chance to buy it under 65, do so. All right, next up is Brian Bolin with his top pick.
Thank you, Cooker, for tossing it over to me. I am Brian Bolin, and I am the aggressive growth stock strategist here at Zacks. And I'm here with a top stock pick for the week. And this is a delicious pick. Truly, truly delicious, especially if you're living the lifestyle that I'm into, which is basically fast food all the time. But it's great fast food. So my pick is Yum Brands. And you can see here the ticker is YUM. And that, if you didn't know, is short for yummy. Yummy in your tummy, because boy, oh boy, I enjoy eating that KFC, that Taco Bell, all that stuff. It is a Zacks rank number 1, and that makes it a strong buy. Value and growth scores right here, not necessarily what we're normally looking for, but again, those aren't the be-all and end-all of what we're trying to do when we're looking at a stock. They're just little friendly reminders of what type of investor should be looking for what type of stock. So let's go ahead and take a look at the detailed estimates page here. So first thing I do is I check the earnings surprise history right here. It's at the very bottom of the detailed estimates page, and I see how often do they beat the number. I see a nice beat here, a nice solid beat here, another nice beat here, and another nice beat there. They are consistently beating the number to the tune of 23% over the last year. Now, I think that's really good. That tells you that management is able to provide Wall Street with an achievable level of guidance that they can still beat. And as you can still see, they can beat rather handily. So when that happens, analysts are left with one thing. They want to move estimates higher, right? And I'm having some trouble. Here we go. Here are the magnitude of consensus estimate trends. And this is what you're really looking for. This is what moves the whole thing. So let's take a look at this here. The most recent quarter, we've seen estimates tick from $1.04 up to $1.07. Next quarter, they're going from $1.15 to $1.18. Full year going from $4.14 to $4.43. That's a big move up. We like to see that. And next year, it's going from $4.60 to $4.82. We love to see positive earnings estimate revisions because, as we tend to think in the fundamental pursuit of excellence here, is that the higher the earnings, the greater the stock price. So let's go ahead now and take a look at the valuation. All right, so 28 times forward earnings is a lot for a restaurant, right? I mean, that is quite a bit. But they did exhibit 32% growth in the most recent quarter. We've got an NA for price to book, and you don't necessarily want to see that there could be some sort of problem in there, but that's going to hold back all the value investors. Price to sales at about 6. It's a little rich, but it's nothing terrible. But here's the real idea of why you want to look at this page here is operating margins. You can see it moving from 19.7% to 21.2% to 21.4% all over the last 4 quarters. So when you're growing revenue and you're growing margins, your EPS numbers are going to continue to move higher. And when EPS moves higher, boy, oh boy, don't let me down here on this one. You can see the stock price moves higher right along with it. So here we have the pandemic down, but then since then we've been earning better, and these margins, they're just going to keep us going this way if they can continue. And next thing you know, while Yum might be let's take a look at that price. Let's take a look at it. $126 today. Maybe in a quarter, it could easily be touching 140, 150 if things continue on their current path. Well, I want to say thanks again to Kevin Cook for his great pick. I, of course, am Brian Bolin with an even better pick. Maybe, maybe not. And I want to refer all of you guys to Zacks.com/promo for some great tips.